What's up, everybody? I'm just wanted to make this video. This is going to be like a tip guide on how to trade a prop account, a prop futures account for somebody that's never traded futures before. I just wanted to give a shout out to some people that just crushed it this past week. We have Trader Joe up $1,000 in it looks like a day. Trader Oracle, of course, crushing $8,000 profit in one day. We have B, he was $2,640 profit in a day. Flash, it looks like he has multiple accounts, so he's up $1,900 on that one, $1,400 on this one, $1,600 on this one, $432 and $268 on the other one. That's crazy. This is all just from this past week. We have Russell over here showing not just his accounts being profitable, right, but one, crazy because he's doing 25k evals on Apex, but he's also crushing it and getting payouts. So he actually posted two of his payout certificates, one for 2,500 and one for 1,500, which is crazy. Another 8,000 a day from Trader Oracle, so on and so forth, man. We just had people crushing it left and right. This guy T crushing it. He is up $850 that day. Another day up $1,300. Another day up $815. Dude, this is what I mean. Don't just take my word for, QuantVue and take my word for actually getting into trading, becoming a profitable trader. I highly recommend going in our Discord. You can join it for free, look at the profits and wins, and look at the users that are in our Discord and crushing it with QuantVue. So let's go ahead and jump into the video where we're going to be talking about ES, and basically I'm going to focus on ES and NQ. I wanted to go over this first. You do not need a lot of money to trade futures on a prop firm, period. A lot of this, I don't know why this is a misconception. A lot of people that trade options say that they don't trade futures because they don't have enough capital to trade futures. Well, you get an Apex account when it's on sale for 90% off, right? You can get a 50k eval for under $19. That's crazy. And then after you pass the evaluation, there is an extra fee once you take that account live. I just put it here as the PA charge, but different prop firms have different terms for it, but that's about $150. So, for about $170 risk, you have the opportunity to cash out thousands of dollars, which is crazy. But a lot of people, don't really make a plan for this. They see this and they see it as a way of quick money and YOLO their whole trading portfolio balance at this. And that's not the way to go about that. So you want to create what I would call a trading budget that's going to basically plan out, I would say, how much are you willing to spend in prop trading every single month, right? And kind of space that out. And then that way, when they have a sale, you'll get more accounts. And when they don't have the sale, you'll just end up with like maybe one account, right? I would highly recommend people stay away from buying multiple accounts early until you have passed one account and got one account to a payout. And once you're confident in your abilities to do that again and again and again, you can then acquire more and more and more accounts. Think about it as like rolling a snowball, right? You're not going to just jump to, having a huge ball and try to move it, right? You start with something small and you're going to roll that money into more prop accounts, more prop accounts, and more prop accounts. And that's kind of the idea. The other thing is having a trading plan. Now, let's just say Apex has a sale, you want to pick up, I don't know, let's say 4 accounts. You're planning on passing all 4 of them, so you decide to just link them all up and trade them all together, because you can do that, right? That's not good risk management. I would say you want to break it up into 4 different accounts, right? So when I have 4 different accounts, you could trade 4 different strategies. You could try to pass, say, account 1 in 1 week. And if you fail, you have account 2 for the next week. And then if you fail, you have account 3 for the next week. And if you fail, you have account 4 for the next week, right? This way you're spreading out your risk. And then you're also giving yourself an opportunity to learn from your trading mistakes, evaluate what you did wrong with the first account, and then try it again on the second account. Too many times I see people send me DMs where they buy 100K accounts and they've never traded futures before, and they're just trying to hit it big. And sometimes it works, but more often than not they end up losing all their accounts and are really bummed out and just in a bad place. That's not how you're supposed to trade. It's not this trading game. So take your time in the beginning, get to your first payout, then use that money to buy more prop accounts, and snowball it. I'm telling you, that is the best way of mitigating your risk, spreading it out, having a trading budget, and a trading plan. When you're first starting out trading futures, I would probably just recommend sticking to NASDAQ and ES, as they're the easiest, probably the most well known to trade. ES per tick, so the minimum value that ES can move is going to be $12.50 per tick, and NQ is going to be $5 per tick. And just looking at this, when you're first new to trading, you might look at this and be like, well, ES is a better thing to trade because it moves, more money per tick. That's not necessarily the case. A lot of times NQ can have more drastic reactions, and so the moves could be usually a lot more money for smaller moves or an even bigger moves than ES. And I just brought up one example of this. This was on Wednesday this week. This is from the same time, so you can see that we made like 3 bottoms. Now notice how the bottoms are kind of almost at the same level on NQ before this move happens, and ES it's going higher, higher low, and then we have the move. So you can see that there's slight deviations, very similar movement though, right? This move on ES ends up only being $1,462.50, and the move on NQ ends up being $4,135, which is a huge difference. So as you can see that you can typically make a lot more money in shorter periods of time on NQ, but that also being said, you can lose a lot more money in shorter periods of time on NQ. You can see that how ES is, I think this move was a little bit easier to read. Now we're seeing a lot more green. We're seeing lower highs being made. And then the push over here, we don't really see the lower highs as much on NQ, but we still get the same push. So there's ES moves slower, right, a lot of times, and I would say NQ just reacts faster and more violently. You can see how if I hover over the different time periods, you can see it's tracking the same time periods on my left and my right. So you can see we line it up with the beginning of that trade. You can see how both of them line up. That is the same move there. On NQ, it was 827 ticks, and on the ES is 117. And you can go through and find examples of this all over the place if you just compare the charts side by side. So NASDAQ and ES both have smaller versions of themselves called micros. So the MNQ and the MES, they trade a 1/10 of the size as a normal contract. So on ES, that winning trade was $1,462, and on MES, that trade would have been $146, and on NQ, that trade was $4,135. On MNQ, that would have been $413.50. So you can see that it sounds good, especially when you're trying to mitigate your risk maybe. However, the one thing that you have to keep in mind is that the trading fees are not a 1/10 of the size. The trading fee compared to the fee of an NQ contract and an MNQ contract is 1/4 the size. So on an NQ contract, you would be spending about $2 per trade, right? On the MNQ, you'll be spending about 50 cents per trade. So you can get chopped up a little bit more if you're, getting out really quick and in really quick on micros than on minis. So keep that in mind. Again, I tell people pretty much just stay away from micros unless you're trading maybe a 25K account or a 50K account, right? If you're trading a 100K account, I just say trade minis. This is just kind of my personal opinion on it. So how much should you risk when trading on a prop account? Now, this is a kind of a mixed question. A lot of people have different answers for this. Personally, right, on the highest end, I think you should be risking early on, maybe aiming for 1% a day. That's a lot of money. On a 50K account, if you can hit $500 a day, dude, that is solid. But realistically, $500 a day, that's going to end up being about $10,000. If you're aiming for that and you have a couple off days, maybe you might end up with like $7,000. That's still going to be great money. And $7,000 is kind of where I personally want to be, no matter what the account size is, especially on a new account on Apex. This has to do with Apex payout structure. You have basically only the ability to get paid out bi-weekly. In your first 3 months of payouts only can be like $2,000 a payout roughly. It's a little bit more, but I just round it to 2,000. So you want to have enough in that account. So if you're trading every single day, that you can take out your max payout, right? But then also be making enough where you can continue building a cushion. And I just find that $7,000 range is just that perfect sweet spot for 50K accounts at least. But the same is true for larger accounts, right? There's no point in trying to be more risky without building up a cushion first to get the account up, say $100,000, because you can't take that out for the next 3 months anyways. Now you're sitting on a nice cushion, you're going to have to just continue trading. So I just don't see much of a point in doing that early on. Just trade slow, snowball. This is the snowball game, right? You can get up to 20 accounts. It means that you can get like a max payout every single month with like 20, 50K accounts of $80,000 a month. That's a ton of money. Snowball it into getting to that point, right? And then if you can make your accounts last that 3-4 months, now you have some money. Now you have potentially even larger money, but you want to continue building up that cushion in that account. Now, if you can't trade every single day, right, and you're only able to take one payout, again, same thing applies. Why try to make 7,000 when you can make 4,000 or 5,000, right? And I'm assuming since you're not trading every single day, you probably have a real job. You probably have a job or you have to go to work and stuff. So you're not able to trade every single day. Let's just say you're able to trade 5 days out of the month. You still might want to aim for that $500, right? It might take you a little bit longer to build up cushion. Again, I always say less risky is better, right? Your number one goal, I think, in prop trading should be getting to your first payout, because once you get to your first payout, you're pretty much break even, hopefully, at least on all your evaluation accounts. I don't think I've ever seen anybody spend $2,000 on evaluation accounts that did it correctly, that did it 1 week at a time, or bought 4 accounts and spread the risk out, right? But I have seen people blow through $2,000 because they bought 300K accounts and then linked them all and then blew it within 2 days. Avoid trading on news, high impact news. Use a website like myforexfactory.com, create an economic calendar, and stay away from high impact news. Why? And people are like, oh, well, I could trade and just put a stop loss. No, on NQ especially, that stop loss can have so much slippage where it can literally wipe out your whole account, especially if you're in it for a lot of contracts. So be extremely careful and know this going into high impact news. Be aware of market hours, when London session opens, when London session closes, when New York session opens, when New York session closes. These are going to be big high volatility moves, right? If you're holding a trade into New York open, it could go against you very, very quickly and you could lose a lot of money. Vice versa, also, like when it is closing at the end of the day, especially on when companies have earnings, you can see massive spikes up or down on the NASDAQ or on ES. So be very, very careful holding past that 4 p.m. Eastern Standard Time and that 9:30 Eastern Standard Time open. I would highly, highly recommend getting an evaluation count if you've never traded futures before. One, because it does have some sort of an emotion compared to a paper trading account. It's an emotion that you're just not going to get with trading a paper trading account. But there's a little bit of emotion when you're trading a prop account for the first time. You're, even though you only have $20 in that prop account and on the evaluation, you still have like this, like, oh, I'm losing this money. There's some type of emotion you just don't get there with trading smaller accounts a lot of times. And it's also like, you're seeing try and make $1,000, right? If you lose $1,000, it's a lot more emotional than just trading at a Robinhood account with a couple $100 in it, or just trading on a simulation account on a Webull or something. There's a little bit more emotions. I think it's great for traders to start with prop accounts and just kind of get that feel for how are my emotions when I'm in trades. How do you know when to add a contract to a strategy? Now, personally, what I do is my max drawdown times 2 per contract. So what does that mean? Well, let's say if you're trading one contract, right? And in the past, I don't know, let's say 3 months, for example, you've had your worst drawdown on that account. This could be over multiple days, right? But your worst drawdown was only $1,000 with one contract. Well, Now, when you go up to 2 contracts, that means that you're going to need a minimum of $4,000. You're just doubling that max drawdown per contract. So that means for every single contract that you trade, you need a minimum of $2,000 in that account. This will help create kind of a buffer and kind of help you hopefully keep your account for longer periods of time and, you know, continuing getting payout. Last but not least in this video is going to be the goal. The goal is to get to your first payout. First payout is one, it feels great. It really puts a lot less stress in trading, makes it a lot more fun. Second payout's amazing. Third payout's even better. Fourth payouts is great. And I would say be careful. Don't spend it all, right? Again, treat this like a snowball effect. Like try to get a little bit more accounts. Try to get to another payout, but don't spend all of it and link all of it. I see that too. Don't do that, right? A little bit of growth, a little bit of growth. Snowball, snowball, snowball. Because a month from now, 2 months from now, 3 months from now, if you lose that funded account, you don't want it to be a big deal. Oh, I lost the funded account. I'm sitting on $40,000. I'm sitting on $50,000, right? Spending a couple $100, maybe even $1,000 to get some more prop accounts. Not a big deal at that point. That's the point that you want to get to. Snowball, slow and steady. One account, use that money to maybe get another account. Maybe use a little bit of that money to get another account. Little bit of that money to get another account, and continue to save on the side. This is how you get into trading. That's it for this video. Make sure you guys like, subscribe to the channel if you haven't already. I'll see you guys in the next video. Peace.